AECI's full-year headline earnings per share climbed 25% to 720 cents, while revenue grew by 16% to 13.3 billion rand. This as volume showed growth of 7% and the group benefited from a weaker rand. The chemicals and explosives company said that it will pursue opportunities for expansion of its specialty chemicals cluster into other geographies. Craig, let me begin with you. Of course, in addition to the chemical side of it, this is also an explosives company, and that makes quite a big chunk of the business. When you look at those numbers, when you break them down between your manufacturing, your chemicals, and your explosives side, did you see any side that at least outshot the lights for you?
Yeah, look, I think what was interesting about the chemical side is that they didn't rely on manufacturing, and that was largely a factor with the rand. So they had to import. That was favoured over local manufacture on the chemical side, and so that things could change, of course, depending where the rand goes there, and that's a little bit of a concern because they've got manufacturing facility that they're not making use of. On the explosive side, again, the story is going to be that in South Africa we've got these deep mines. They're saying that's not really where the market is. It's the rest of the African continent. They're talking about Indonesia and other areas, Chile, Brazil, etc. So obviously there's going to be expense in terms of moving their product into these markets on the explosive side. So there's challenges on both aspects of the business.
Yeah, Jean Pierre, my disappointment with the explosive side came in the volume side, 1.2% up in this period. That's for the full year. And at the same time, the company is talking about a poor performance that came out of East Africa. Not really surprising, particularly considering we don't know of any minerals that come out of East Africa, but good in Central Africa, where I think the money ought to be made. What did you pick up?
Yes, look, those volumes will pick up as you move forward, as they ramp up the ISAP program, which stands for Initiating System Automation Program. So quite a mouthful.
It is.
But it's about replacing a factory that they have where people work to make initiating systems for explosives, and rather using a robot, a fully automated factory to create those initiating systems.
Right.
And they still are running the old plant, so those volumes need to come down as the new plant's volumes ramp up. So even though total volumes didn't move by much, you are seeing a mix effect as more of their production is made in the ISAP plant.
Sure.
And you will see that in the full year as well, where the volumes from the ISAP plant specifically will ramp up quite strongly in the coming 12 months.
But if you take out the impact of the rand out of these numbers, what kind of performance do you see at the operational level for the Africa, non-South African assets of the business?
Well, the thing about AECI is they are very sensitive to the rand.
Right.
So if you take out the rand, all of a sudden your like-for-like growth is quite a bit lower, seeing that the rand weakened in this result relative to the comparable period. But because they are so sensitive to the rand, I would still look at it even with the weakening of the rand and the effect that the rand had, and still say that they are expanding into Africa. It's the last frontier in terms of the big international explosive and chemical companies, in terms of no one company being dominant in Africa.
Yeah.
So they've already got operations in Indonesia. They're talking about expansion in Brazil, but Africa is still a keen focus, and I see a lot of growth for them still in Africa.
Yeah. Craig, this is of course the biggest explosives company in Africa. Management focus for the coming months, I would imagine, they say that they are looking at Africa expansion, just as Jean Pierre has been saying, and they are also looking at Asia Pacific in addition to South America. Do you get the sense that they may be spreading themselves a little too thin here?
Yeah, look, as I said before, it comes with costs, but the South African market's changed, and they need to do that in order to get their product out there. And perhaps if they can be competitive on the ISAP and on various other parts of their business, they'd be able to improve those operating margins and be able to deliver. In fact, the operating margins have improved from 9.2 to 9.8%, and I think with new technologies they're hoping to get it somewhere between 11-12%. So the story going forward could be good in terms of improving costs, because they are going to have other costs that will come on board in terms of entering other markets.
Yeah, one of the growth areas that they speak about is their chemicals business, and they're talking about different geographies as well. But where could they go?
Look, I'm not too sure. I don't know the company close enough to know exactly where they would go. And I mean, they've got quite a wide variety of chemicals businesses. But I think they're looking at some growth in the agricultural side as well. And we've seen some good growth. So it's not just a mining focus, but also trying to expand that agricultural side. So I'd imagine that that's where the focus area would be if they move to other geographies.
Yeah, Jean-Pierre,
even locally, I think they could expand the agricultural side.
Yeah, Jean-Pierre, if you were buying into AECI now, what would you be buying?
Well, it is quite a complex company because they've got these different business lines. So what you are buying is you're buying an explosive manufacturing company. Okay. You're buying a chemical company.
I mean, in terms of growth going into the future.
Well, I'll tell you then per division as well what
after
the growth
you've explained.
Okay. So you have a property company in Heartland, and you've got a fibers company in Sands Fibers. And if you look at each one of those, they've got different growth profiles and different prospects. In this result, they all fired. Going forward, explosives will do very well if the commodity cycle continues and commodity prices are supported.
Right.
The chemicals business still has a lot of legs in terms of local consolidation of a very fragmented chemical sector, plus weakening of the rand, which will assist that division. And then the property division will benefit from a very slow recovery in the property market in general, which will help them in terms of the properties that they have that they are developing and selling off. Right. Then the fibers business is very small and they'll probably sell them at some point. So each division has its own growth prospects, but in total, I think there are decent prospects for AECI.
You're wearing a red hot tie. I suspect what your answer is going to be. AECI for you, hot or not?
I would say it's hot, but not at the same temperature as ShopRite, a little bit less so because the price has run up from the 70s into the 90 Rand range, and that makes me a little bit more cautious.
On what kind of a view? Or what sort of time frame?
Well, we look at stocks on at least a 12-month view, more at a 3-year view. So on that basis, I would say it's hot, but not screeching hot.
It is not hot. Let's come to you, Craig. For you, AECI, hot or not?
Look, we can't forget that there's a BEE transaction that's going to have a 200 million Rand impact now in the next set of results. Your second half's probably going to be better than your first half. But I wouldn't rush into it. I think there's certainly time to buy. So I'm going to say not hot because there are better opportunities out there.